Good afternoon, everybody. Welcome to 12-Minute Trading. My name's Doc Severson. I am joined here with Dave Lukas. Today is Monday, the 22nd, is it? Yeah, 22nd of
It is the
April
22nd.
in 2024. We have, wow, we're flying through the quarter. We've already got the first quarter done. We are just about through with the first third of the second quarter. We have the GDP for the first quarter coming out this week.
hmm
So I think it's still, I don't hear anybody talking about any kind of negative GDP or any kind of thoughts of recession. We're not quite there yet. We have enough geopolitical risk to handle for the rest of the year, I think, in the past couple of weeks. And the market is bouncing all over the place. Today we're seeing a 70-point move right off the
hmm
lows today so far, with the most important part of the day yet to come, the last 90 minutes.
Yeah.
So where do we go from here, Dave? What are you thinking?
Well, this is exactly, my students shouldn't be surprised by this at all. Coming into Friday, I said, okay, we're oversold. We're outside the lower Bollinger Band. We're pretty exhausted on the daily charts. Probably due for a snapback. I didn't think we'd get this big a one today, like for the one day wonder snapback, like to get it all back in one day. But we did so far. We'll see how the last 90-minute goes. We could sell down from here. We've seen that happen a lot. But the move that we're seeing is really normal for any type of corrective action that we're seeing like this. You get oversold, you get that bounce back. It's usually a fairly violent bounce back. And then you kind of waffle around, you push a little bit to a lower high, then you roll over once again to put the final kind of cherry on the on top of the sundae, if you will, for these type of moves. And then that marks the bottom, and then you are back to going. And this is honestly one of the best things that could have happened to this bull market right now to keep it going. We really needed to get some fear back in, pull this thing back, get to a lower level. We'll probably be in a range for like a month at this point, and then it'll lead right into those summer months where we get that summer rally and we get going again and everything as well, and that continues this bull market. So in some ways, I'm really happy to see this action. Right. I know for some people it's hard to manage around and deal with, but I'm really happy to see it, and it's welcome, and I look forward to trading through it for the next couple of weeks or so, and then getting into rally time again.
Dave, something that you had talked about quite a while is on the weekly chart using the Bollinger Bands here.
Yeah.
And look where the price has come down to nestle as support is right on Friday, the end of last week.
Right at that
Hit
moving
that
average.
middle.
Historically, that's been the spot.
That is a 20-week moving average on the SPX. And we did the same thing back here. If you look back at, what is this, August? We came from the upper Bollinger Band down to the middle, bounced up to a lower high, undercut that, eventually went outside the lower Bollinger Band. So is that something that you think we're going to have to go through, like maybe a shallow bounce up to a lower high and then maybe a finishing move here at 4,800?
I think it's all going to depend on, earnings. We got PCE on Friday, right?
Yeah.
So if that's high, that can bring fear back into the market. I think we're in, right now, for the first few days of this week, I think we are probably a little bit more positive. Today's big move up. I don't know if it'll continue on tomorrow like this. I mean, what are we up? I'm looking at the NDX. We're up 265 handles, and the expected move for the day, I think, was like 120-ish. Right. So I think we've got a lot of euphoria coming in today. I think we got a lot of covering going on too. I think that dip this morning where it went back down and looked like it was going to sell off again. In fact, the NDX was negative about 20, 30 points. I don't know if the SPX ever got negative, but to see that snap back and, be up 265 handles now, just tells you that's a lot of short covering that came in. I think people thought we were going to drop further, got just waylaid and faded, and have had to cover to get this thing going higher. So tomorrow maybe we're a little bit more subdued and stuff. And then we got earnings, right? We got Microsoft on Thursday. Is that right? We got Meta. We got Tesla tomorrow. I don't think is going to be as big of a deal. But I think the earnings and PCE will really dictate the tape this week.
Yeah, something that you were talking about here. I'll go back to the chart. Is that here's the gap from Friday. So that was where we closed on Friday, and so we gapped up this morning. Things were pretty positive, and we did the same exact thing that we've been doing for the past 2 weeks, which is like, nice looking range in the morning, and then start to work higher, and then all of a sudden the selling comes in.
Right.
And we rejected the anchored VWAP, and we're heading down. It's 11:15 in the morning. And I think at this point, everybody was saying, okay, here we go again.
Right.
Here goes the selling. We're going to be taking out that bottom expected move for the day. And, here we go. And then all of a sudden, boom, and this thing just took off.
Yeah, it was a trap.
And I was in the middle of an iron fly, a 0 DTE iron fly here. And I was like, you know what? This looks different. And I blew out of it. I did not hit my profit target. I just blew out for like $15 a contract. I was like, this is about my fair share today. This thing is on its way to moving again. And I was glad that I did that, because that would have been painful.
Oh,
and
yeah.
so there we go. There's a 70-point move right off the bottom. Now, something that you and I had talked about before we got on the air here is where's a potential place that this is going to bounce back up to? And we looked at the SPX, first of all, and we looked for, I've been struggling with this because the SPX is not really, the price is not bounced, nor has it found support at likely levels that we expect it to. So it undercut the 23.6 retracement the other day on Friday, and, I was expecting a little bit more of a reaction there. But when we looked at the ES, which is the futures contract on the S&P, all of a sudden things start to make a lot more sense to us. If you look at this, so wherever the high is up here, notice where support came in, right at 5,200. And then as we got to 5,100, it took a couple of days before that released. Okay, so if we play the fib game here, Fibonacci retracements from the highs down to the lows, now all of a sudden everything starts to make a lot more sense. Yeah. So let's see if I can zoom in here. Okay, so we're looking for a bounce off the bottom anywhere from 38.2 to 50% to as high as 61.8. Notice how well the 61.8 ties in almost perfectly with that resistance level here, which is just right around 5,200. So to me, this is the most attractive level for this to bounce up to. However long it takes, it may take the rest of the week. It may be somewhere next week. We may get some kind of complex movement that eventually gets up to there. Yeah, I wouldn't be surprised to see some form of lower high, rolls over, higher low, and then boom, up she goes. But we could also see a 50%. Notice how well this lines up with 5150. 5150 was a level of support along the way. And so we could react at 5150 or as high as 5200. But what I'm thinking is very similar to what we went through back last August, where we went through the same thing here. Let's see if I can bring this up. So from the top to the bottom, notice how we did the same thing here. We got up to that 61.8 retracement, could not really get through it. Did one little trap, that was one little bull trap that was sitting here, and then boom, off to the lows. So what Dave and I are thinking, is that we may bounce up at some point here. However we get there, probably going to be some form of complex correction here. Very, very unlikely for us to do a V-bottom at this point. Very unlikely for us to be. It could happen. I mean, I said the same thing back here. I was like, well, I don't think we're going to V-bottom from here. We did. So anything can happen when it comes to price. But
well, remember what I said to you too before we got on. I said we'll see what happens after 2:30 if the pros take over and start selling this down some. We've got a little bit of selling going on right now, but if you see the SPX down like only up like 40 points, 30 or 40 points on the day, that tells you that this has been covering. People got out and then it came back down. So we'll see how this thing goes. But man, it's a pretty impressive move for the day so far.
Yeah, this is what happens in. We got a question in here today. So since you sold a put spread for May 17th below 5,600. I'm wondering how
Yeah. I'm trying to
likely.
figure out what that means. I didn't sell a put. Well, I sold a put spread for one of my double doubles down below 4,600. Maybe that's what you mean, 4,600. So, and I did that because I think that 4,800 is probably the ultimate level that this would get down to. So my put spread for that trade is at like 45.60, I think. Let me look. May 17th. Yeah, 45.60 is my sold strike, and then 53.40 is my bought strike for the call side, or my sold strike for the call side, I should say. So I've got about 300, plus points to the upside, and then got roughly, a little over 400 to the downside, which is what I wanted. So, so no, I dipped my toe in the water in that trade. Like I said, I was doing half a normal contract size because I think we were at a point where we would see a bounce like this, and we get this kind of bounce back up, lower high, and then potentially roll over. But remember, typical double trade, I'm in for about 2 weeks and I'm out, right? So I, had enough time that I thought that would probably work out pretty well. And it's so far it is that trade's already profitable from Friday even to today. So we'll see. We'll see how we end up with things here. But it's going to take a little while. Unless some type of news or something comes in that is really, really damaging, you're not going to get that big sell off down yet. We need to trap some bulls back in first before we see that happen.
Yeah, don't be surprised to see all kinds of. I mean, there's so many. Like the market's wound up so tight right now. There's going to be a lot of forces going in both directions at this point. Like any kind of disappointment from here, we could see a flush, maybe to a higher low, and make everybody think it's going to print a low, and then all of a sudden it rockets up. And
I'll tell you what would be crazy today. Yeah. What would be really crazy, and this is something to watch in the final hour. If the cash index, the SPX, doesn't hold 5,000 and it sells down back below 5,000, that is a really good sign that this was just kind of a one-day wonder type move, and the bears are probably still in control. If it can't hold 5,000 after punching through it like it did today, that tells you that there's, it was just, that's all it was, So, yeah, because we're selling down pretty good now. A little bit. I think the SPX went in the 50s. Yep.
Yeah, so it's at 50.26 right now. So
yeah, interesting move. Interesting move.
We shall see. Are there any questions? Dave and I have to take off here in maybe about 5 minutes or so, because we got trading to do. We got positions to adjust. So if there's any other questions from those of you that are attending live, glad to see you out there. And for those of you that are watching this on a replay, you're always welcome to fire a question in through email that we can read off during our session next week, which I think we'll both be here next week. So, go for that. Let's see what else we got going on.
Anybody comes in. I think the biggest thing, guys, that right now, so you guys remember we went through this choppy period. Remember, they days up 50, down 50 on the SPX and everything else. Then we sold off, right? Now we get this big bounce back, right? You have to watch that we're going to get in maybe some chop again and then go back over. This isn't over yet, or traditionally it shouldn't be, right? It doesn't usually V bottom from this. Excuse me. So I think the key thing here is just to, just be careful. Let this thing play out a little bit more. Right. It's just, this isn't over yet. And so I think patience is really, really important. If this thing does roll back over, you're going to get some unbelievable opportunities, especially where the implied volatility will be. I mean, it's up higher now, but imagine if we roll down under 4,900, and that VIX spike you're going to get on that. So just, this week is a good week to kind of let things play out. And by the end of the week, we'll have a better idea, I think, after PCE, after GDP, after the earnings. Because you saw Netflix last week. Netflix crushed earnings. But one little thing, they said they're not going to look at subscribers as much anymore. They're going to focus on profitability. And that stock got crushed, right? So any one of these guys, Microsoft comes out with lower guidance than expected, anything like that, and all of a sudden this thing turns on a dime and heads back the other way. So just something to think about for this week. Don't be in a rush to trade. I'm not trading until Friday this week. I told my students that. So, yeah.
So Sergey is talking about the SPY 520 strike, and that could be for a couple of different reasons. So what he's looking at here is, if we look at the spiders and the 520 level, that's kind of where things slowed down and stopped. So
Right.
there's a couple of different ways that you can look at that. I would say more of the professionals are looking at the 520 level as a level that they can sell call options. So
Yeah.
you want the price to be below there if you're selling a call option, and then you're not liable for assignment. You don't have to surrender your shares, or, God forbid, you're doing a naked call option. You don't have unlimited risk to the upside above that. Or the other way that you can look at this is there's going to be what I would consider to be less sophisticated investors, which are going to buy call options out of the money because they're cheaper.
Right.
And they're going to say, hey, I think it's the price is going to come up to there. And so, yeah, it's you're going to see, especially around the century numbers for any option chain, you're going to see the century numbers with much, much higher numbers than everything else,
Yeah.
all the strikes in between.
What cycle are you looking at though? He says monthly. Is he talking about May? Is he talking? I mean, April's over, right? So we talking about May at this point?
Oh, it could be any. It could be any, really.
Yeah.
So,
I mean, 520 is an 18 delta right now. So there's a chance, kind of what Doc said, 5,200 on the ES. So that keeps it below 520. But I think if you sold a call spread right now, you have a chance of getting some heat on it, But I think the 10 delta is a lot safer right now. I think a good 10 delta is a solid bet in this market.
So what Sergey is looking at here is, if we go out to 17 May, I think is what he's talking about.
So that'd be about an 18 delta, the 520, I believe.
So the volume
10 delta is probably closer to 530.
Just today, the volume is 12,000 out of 41,000. So
big.
And then if we go out to the deltas on this thing, we're seeing the delta is about 17 and a half. So that's roughly a 84% probability of success on that trade.
And I've just been seeing more lately, 10 deltas have been a better play on the indexes. They seem to be, it seems like the 18s, the 15 to 20s have been getting hit. So I've been finding 10 or even below are working well.
Well, if you think about it, the 16 delta is one standard deviation. So what we've been seeing lately is
more than that.
What we've been seeing lately, and this is intraday, this is just about everything. We've seen the price moving much further than the expected move. And so, 16 delta is not protected these days.
No,
or
my double doubles, I'm putting over 2 times the standard deviation out of the money, and we're still like, I had one that I had to manage even last week. That's pretty rare. So that's why I'm saying I think 10 delta is a little better bet if you're trying to play call spreads right now. That's all.
Cool. Okay, well, nothing else seen. So we wanted to thank you guys for joining us here today on the 22nd of April. So next time we see you, we'll be at the end of April next week, 29th. And same bat time, same bat channel. So look for us. Make sure you get subscribed to our YouTube channel so you're notified. Make sure you hit that notification bell. So when we do light up the channel, you'll be notified of that. So not seeing anything
enough. This is a monster week for data, guys. Just let it play out and then take advantage, from it. So this thing's not over yet.
Okay. Well, thanks everybody. Thanks for joining us here, and we will see you next week.
Bye, guys.
Adios. Bye now.